Elon Musk continues to prove the skeptics wrong. Just announced a monster first quarter 2022 results. We're going to talk about those results in just a second. And it makes me wonder, looking at these just incredible results, is it possible that Tesla shareholders that currently value Tesla around $1.1 trillion, could this be worth, could Elon Musk and Tesla earn a valuation worth, let's say, $2 to $3 trillion within the next 5 years? I gotta say, if they keep executing like they've been, it's certainly in the realm of possibilities. Let's talk about all that and more. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. And so look, I just did a prior video prior to earnings wanting to talk about the setup, saying, look, it's up 1,800% in just the last 3 years, largely deserved on fantastic results. But I did have some concerns that there's this possibility for a great reset in the years ahead, largely due to the fact that the valuation multiple has expanded so significantly. You're looking at something nearly 20 times sales on a last 12 months basis. Many companies are not able to get anywhere near this. So this is baking in continued hyper growth and significant profitability in the years ahead. And honestly, that's what they're delivering. They're going to need to keep delivering that, though, if they're going to sort of have an attractive return from here, just given how rich that valuation is. But they delivered this quarter, first quarter 2022. You're looking at 87% growth in automotive revenues, 32% plus gross margin, which is up from the fourth quarter. You see their profitability, their operating margins is around 19%, which is record levels for them, up from 14.7 in the most recent quarter. Significant free cash flow, $2.2 billion in free cash flow. This company has effectively paid down all their debt. They are in a rock solid position. They're just crushing it. And what's amazing to me about this 19% record margins is that includes the commissioning costs for their factories and R&D for launching their Giga Berlin, which started production in late March, and Austin in early April. So here it is, significant costs that effectively went into this quarter to help build this out, and yet they were still able to achieve 19%, margins. Really something special. Now, interesting that, looking at their second quarter, their outlook, they did lose a little bit of volume production with the COVID shutdowns in Shanghai. Production is still, resuming at limited levels, they're talking about. So they're saying, look, this will impact build and delivery volume. So effectively saying, hey, growth might take a hit. That said, Giga Berlin and Giga Austin are ramping up. That said, it's not as efficient necessarily, so you're going to see an impact on gross margins. But they're also saying, look, we have higher ASPs, so effectively the amount they charge for their cars, raising price a little bit, that's in their backlog, so that will help offset some of the headwinds. They're still expecting about 50% or above growth rate for this year, remains achievable for this year, which is really something. Now, overall, they're looking at around 40% growth in vehicle production in 2022, maybe up to 60% year-over-year growth. So yes, you're looking at 80% revenue growth this year, but given the headwinds, they're seeing maybe 40 to 60%, what you're kind of looking at for auto revenues. That said, they are making significant investments in things like Giga Texas, which has this dedicated robotaxi line, which will have no steering wheel or pedals, which is really amazing. And they're trying to achieve the lowest fully considered cost per mile or cost per kilometer, accounting everything. And so this is Elon Musk. And so it's, I think, going to be a very powerful product where we aspire to reach volume production of that in 2024. So there's just a lot of exciting potential things going on. But looking at their current results, their market share of light-duty vehicles in the major auto markets in the world, whether or not it's North America, Europe, or China, you see they have around 2% market share. It is just incredible how they've rapidly taken share. This is an unrivaled company. When you see this types of results, this is unrivaled. This is what you'd like. And Elon Musk also called out how, look, we only recently crossed this 1 million units, effectively cars being sold in the last 12 months. Their goal is 20 million units per year to get sold. So they're effectively saying, look, we're 5% the way to their goal, and that they're confident. Once again, Elon Musk repeating the 50% annual growth for the foreseeable future. Now, the question is, how do we think about valuations? And I'm going to walk through this valuation in detail, so that way, hopefully, it's a little more easily for folks to understand. Now, keep in mind, this is a hypothetical framework. Stock price can go way higher or way lower based on how Elon Musk and the team at Tesla deliver. So looking at it, this is the range of what's the current market cap. The current market cap doesn't have a range. That's why you see the same price for all three, and you see the same market cap. It's currently around $1.2 trillion based on their current diluted shares outstanding. So you take the share price times diluted shares, you get around 1.2 trillion market cap. Then you look at their revenue the last few years. You could see 53.8 billion in revenue in 2021. What's 2022 going to look like? And so looking at this, they grew over 80% this most recent quarter, but they are talking about a little bit of a slowdown because Shanghai came offline. It's unclear how the rest of the year plays out. Maybe even see potential, recessionary headwinds later this year. So I'm saying maybe 50 to 70% growth this year in revenue. You got a lot of things working really well. A lot of products, growing very quickly, 80% plus growth once again this quarter. So I'm saying 50 to 70% growth in the year ahead, 80 billion to 90 billion in revenue in 2022. That's potential, hypothetical, if they continue to execute. So then what's the question? What's the profitability in the future? What do the margins sort of look like? And so they're currently just shy of 20%. They probably would have been over 20% if they weren't investing, and doing the R&D related to, let's say, building out new incredible factories that are ideally focused on robo-taxis, like they mentioned that there's a line there in Giga Austin. And so looking at this, I'm saying 20 to 30%. Maybe you can go even higher. Some folks, and Elon Musk has called this out himself, how robo-taxis could have really high margins over time. So 20 to 30% profit margins. Then the question is, what's the growth rate over the ensuing years? Because I always look at things over a 5-year time frame. And honestly, that's the question folks are asking is, can you have an attractive return over 5 years? And if you're starting with a $1.2 trillion market cap, you want to see something where you pencil out an end business valuation of, let's say, 2 to 3 trillion. And what I'm saying in my high side is, you could potentially pencil out $2 to $3 trillion valuation if they continue this type of incredible execution and people just keep buying their cars in record numbers. And so let's talk about this growth though for a second, this 35 to 50% annualized growth in the years ahead. And also, why am I assuming such a low multiple? A lot of folks might say, well, Daniel, for a company that's growing 50% annualized, it doesn't make sense to assume an N multiple of 25 times. I'm going to talk about that. Let's dive into that. So the reason why is because currently, this is per Tesla's own numbers, they're currently around 2% market share. And let me ghost myself so that way you can see the full thing. So currently around 2% market share. Well, if they indeed grow at that 50% compounded for the next 5 years, that implies they'll effectively have 15% global light vehicle market share. That is going to be really, really tough to grow from there. Now, it's not like if you grow again at 15%, that means, now we're going to be 25% or now we're going to be 50%. So you need to ask yourself, at what point, where does their market share stabilize? Because clearly they're taking share now, and they're clearly unrivaled. They're clearly taking share, up and to the right. That's what you want to see. So the question is, at what point does this become a stable business? Their autonomous, their light vehicles, in which case that's no longer driving their growth rate, looking at this. And so that's the challenge in terms of thinking about that multiple. But they do have other things that can, let's say, further drive acceleration, like Cybertruck, which currently they're not selling. So that's not included in that light duty vehicle market. You're also looking at, effectively looking at the Optimus robot, which Elon thinks can be just a huge market, and that makes a ton of sense to me over time. That said, look, they still need to roll this out. And you also have robotaxi. So, in the robotaxi, it's unclear if they're truly very successful with that, how will that impact sales of vehicles? Now, maybe it would be worth it because you're at much higher margins. So you do have these different questions, but is it possible that you see, Tesla at a $2 to $3 trillion valuation 5 years from now? I'd say it's certainly possible. But once again, it's going to require exceptional execution. It's going to require, let's say, 30% margins. It's going to require 50% annualized growth after this year, which is no easy task. And it's going to require, let's say, a 25 times earnings multiple 5 years out. That gets you to $2.6 trillion market cap, over 100% return over the next 5 years. And it's possible keep in mind, this valuation doesn't really include a lot of the optionality with things like robotaxi and Optimus. Now, I'm not personally yet buying Tesla stock because I look at this and I'm saying, well, there's also this sort of low case scenario, which still has very arguably for most companies in the world, very aggressive assumptions. You're saying, hey, I think this business is going from 50 billion last year to nearly 270 billion over the next 5 years in terms of revenue. That is no, small feat. That's really tough. So it's very possible if you have valuation contraction, that you could see a situation where, this is down 50%. So that's partly why I'm considering it. Like what's partly holding me back from buying it. I'm tempted to buy a little bit if it were to sell off, let's say to $700 a share. If I were to see something like that, then I'd say, okay, at that point, the risk reward might be more compelling. Now, keep in mind, this is a hypothetical framework. If you have a different perspective on what's going to drive these fundamentals, I'd absolutely love to hear it. Particularly, the assumed multiple, honestly, I don't want to go much higher, between 15 to 25 times earnings multiple, because you're looking 5 years out ultimately for a product that you sell once every couple of years. And there's a chance they even disrupt their own business model with robotaxi, in which case, how many cars do you need to sell once again? So, this is what I'm looking at from here. I don't find this setup to be the crazy compelling, risk reward. I see this as interesting, and I'm really excited and rooting for Elon Musk, but I don't see this like, even if they're able to get, I guess this is the point, even if they're able to get $3 trillion market valuation at this price, it's just not crazy compelling. Now, if you're interested in finding compelling ideas, potential multi-baggers that you can buy right now, check out unrivaledinvesting.com. I also share a real money portfolio that is both hyper-growth as well as deep value stocks. That's once again at unrivaledinvesting.com. I'd absolutely love to hear your take on Tesla. If you're an owner, mega bull or mega bear, I'd love to hear it. I gotta say, from looking at these results, anyone that's like short Tesla stock, it's just an incredibly painful position to be in, because you're looking at a company that is world-class execution that at least you're seeing from the fundamentals. I mean, 80% growth, record profit margins, even despite several investments, lots of optionality. So I look at this, I'm like, you know what? No matter what you think of Elon Musk, like, this is incredible results that they've delivered. Now, I just look at it and I'm saying, I just don't think the risk reward is just super compelling, even though there's a ton of optionality. So look, what's neat about this is every quarter you get an update and you say, hey, where's my thesis? From this, I'm updating my thesis saying, yeah, previously I didn't think they would be growing this fast, 80% plus. That is phenomenal. If in the second quarter they keep posting this, then I'll say, yeah, this is fantastic. But once again, valuation always plays a key role that you want to consider when you're looking at any investment. So if you enjoyed this video, please make a point of hitting that thumbs up, and please make a point of hitting that subscribe button as well. Thanks so much for tuning in.